How's it going, fellow traders? Magic Trader here, and this is the CFTC report for the data that was recorded on July 21st, 2020. Here is a brief snapshot of the positions held by the big institutions as of that date. And so let's start by having a look at gold. So having a look at gold, what can we see here? All right. Well, we can see that price was consolidating here on the weekly chart, and as it was doing that, the institutions increased their long positions from 330 to 334,000. Now at the same time, they left their short positions alone. Okay, so this increase put the total size from 397 up to 402. Now remember, the maximum total size that they've ever held is 463, so we do have room to get up there. Max size that they've held with long positions is 408, so we do have room until it gets up to those highs as well. Okay, but I want you to focus on something here, because if you take a look, you'll see that back in March they were very aggressive with longs. Okay, then after in May they started becoming less so. Okay, and take a look at the numbers. Used to be 87, 85, now we're down to 83% exposed on the long side. Alright, and another thing that I'll point out to you here is if we take a look at the average long percent exposure, it's 86. We're at 83, so we're below average in terms of exposure. And that would make sense because, you know, we've had a big rally in price, and typically when we have big rallies in price, we'll see price slow down, the momentum dies, and then price reverses back down. So I think that's going to be in the works. We've been waiting for that for some time now. Price took out some supply that was on the charts, and so we're at all-time highs now, and anything can really happen at this point. When we're dealing with all-time highs, we are entering into uncharted territory. When we're in uncharted territory, there is no map to dictate how price is going to move. So it could be tricky timing what is about to take place, and that's why we like to focus on the data in moments like these, because we look for the signs to tell us when price is going to turn over. And so what I've been pointing out is an indication, early indication, that steam is going to be running out soon, and then we'll see a drop in price at some point. Okay, now we take a look at oil. So oil, they reduced their longs 692 to 687, but the bigger reduction came in short positions. Interesting. Now remember what we've been talking about. Price came up to an area of supply, but based on market dynamics, the expected move is for price to head even higher. And then we are expecting a move to the downside. So interesting how if we are expecting a move higher, you know, we could expect short positions to be closed off. And so that's what we are seeing now. That's a big decrease, 152 to 139. It's a big decrease. So that decrease in shorts allows long exposure to pop up 1% to 83%. And yeah, so everything's looking good in terms of the positions for a little bit of a push higher and then eventually a move lower. Dollar. What are they doing here? Price was just about to make its move. Big increase in short positions. Now that's a big increase. Shorts were 17,000, big increase to 24. Now we can see shorts are aggressive. Okay, but we were anticipating this drop since back here. That was the first indication. Okay, then we got the coloration of the cells going from bullish to neutral and then bearish. Okay, so those were the early signs of the drop back in June, right? Early June. But now we are getting a very clear indication of this move to the downside, with short positions becoming very aggressive at 24,000. So positions are looking good for a continued move lower in the dollar. Now we move over to the Aussie US dollar, and price is consolidating here on the weekly chart. And as that was taking place, the institutions reduced their long exposure from 45,000 to 41,000, and then they added slightly to their short positions. So what's going on here? Now we saw a nice increase here back on July 14, where we saw the net positions go from a negative 694 to a positive 4,250, which was a good sign for this continued move up. So what is going on here? Well, I want to point out something here. I want you to see what we were looking at. Okay, from March to June, the positions, exposure of the positions had a bearish sentiment. Okay, that has since gone to neutral. Okay, so bearish to neutral. So is this switching over for a bullish move? It's very possible. I mean, we've been talking about this in the level 1 classes, in the observation journals, and in more detail in the actual EURUSD reports. So we're looking at this and we're trying to determine what is likely going to take place. Well, if you look at where price is here on the monthly chart, you'll see that it is now up against a descending trend line. So that's going to be an obstacle that we're going to have to work through. But in terms of positions, if there was going to be a bigger push to the upside, this is normal. This is normal behavior. Okay, switching from bearish to neutral and then into positive. Okay, eventually into positive territory, bullish territory is what we'd expect. So we're going to keep an eye on the positions here and see how things unfold. Then we have the USDCAD. So this one's an interesting one. Very, very interesting. So we see a lot of weakness in the dollar, and so with that we are expecting likely to see weakness here on this pair. So what do we have here as price was consolidating here on the weekly chart? We see an increase in long positions from 47,000 up to 50,000. Okay, and then we see, boom, right there. Okay, that's a massive move. 27,000 to 34,000. Okay, that puts the positions, the short positions, into a slightly more aggressive territory. Okay, and with that, if you take a look at the sentiment here, it was bullish. It's turning neutral. Okay, the sentiment is turning neutral. Look, the long exposure average is 69%. We're at 60. Okay, the short exposure average is 31%. We are at 40. So we can see that there's something switching here. Okay, something switching here, and I believe it's in line with the dollar. What we're seeing here, it's in line with the dollar, and we're likely going to see a continuation of this momentum in this shift in positions, because that's going to likely create a situation on the chart where we're going to see more downside. So we're monitoring the charts, we're monitoring the positions, and when the coast is clear, we'll engage in this chart with positions to the downside. US Swiss franc, this one, the weakness, we've been watching this. Take a look here. Okay, price was consolidating, big increase in short positions from 17 to 16 to from 12 to 16 to 17 now, very aggressive with short positions. Longs are cooled off. We've been looking at this for quite some time now. Okay, another thing is, if you take a look here, they were bearish, they went a little bit neutral, now they're starting to get into bearish territory again. Look at the big increase here. Look at that increase, the net positions. Minus 1,000 to minus 7,000 right now. Total positions are very low, 28,000, when the total max is 100,000. Okay, you take a look at the positions here 17,000 versus the 12,000 average. That tells you a lot as well too. So we are expecting more downside with this pair. Okay, just in line with what we're seeing with the dollar as well. So we have the euro US dollar here, and so let's first start by taking a look here at the long and short exposure. Back in December up until March, we had a situation where the sentiment was bearish. Okay, and that would correspond with this price action here, right here, bearish. Okay, then all of a sudden, starting in March, we started seeing bullishness. Okay, right throughout until now. Okay, and that would take us from mid-March to here. So the early indication based on the COT report and the data that price was going to start heading up was in this area here, right down at the lows. We had an early indication based on the COT data, based on the use of the spreadsheet and the coloration of the cells to give us an indication that this reversal was going to happen right here at the lows. Okay, and again, if you take a look at the net positions, you can see very bearish. Now look at where we're entering into now. Look how bullish that is. Okay, a big increase in longs from 194 to 204,000, a drop in short positions. Now remember, the all-time maximum amount of long positions that the institutions have held is 262, so we've still got room to get there. Okay, so price is following through with this nice move to the upside. We are expecting more push to the upside to come, but it's not going to be as simple as most people are going to think. It's not just going to continue from where it's at. There's going to have to be a rest period, and there's going to have to be a retracement. Where is it going to retrace to? Well, we've detailed this in the latest EURUSD report and also in the observation journal. So I'd recommend, if you're a student, to have a look at that, and you'll see what we are expecting. But so far the data is very much in line with what is taking place on the charts. Pound US dollar. So this one has a different dynamic on the chart. And so the positions are reflecting that. But if we take a look here, we'll see long positions have been increasing over the last few weeks. 39 to 43, now 46,000. And if we take a look at this latest increase in shorts from 56 to 61, very interesting. And that came as price was consolidating here on the weekly chart. So price is making its way up into the weekly area of supply. We take a look at the coloration. So we've gone through the coloration of the cells many times, and we've seen the importance of the story that the coloration of the cells tell us. Okay, so if we look at this bottom portion here from April down to December, it was bullish. Okay, December to April, right here, it was somewhat bullish. Okay, and now if you take a look from April to July, what's the end result? What's the end result there? Neutral. So we had bullish from here to here, and now neutral. So looking at those squares and keeping things into context, this was bullish price action, this is neutral. We have not entered into bullish territory again or bearish territory. Even though net positions are showing a negative, the coloration of the cells are neutral. Okay, maybe a touch of bullishness, just a very small touch, but this is neutral. Okay, and rightly so, because we have price in a range on the weekly chart, and that could contain price for quite some time. So basically a very different dynamic that we're seeing on this chart here than what we're seeing in the other ones, and I wanted to make special note of that. The US dollar Japanese yen, taking a look at the positions here, we see an increase in longs from 26 to 31,000, also a nice increase in shorts from 45 to 50,000, and this came as price was consolidating here on the weekly chart. So examining this here, we'll take a look here and we can see that from December to March was bullish. Okay, bullish. And ever since then, from March to now, it is bearish. All this is bearish. So the expected move is to the downside, in line with what we are seeing with the dollar. Now obviously there's going to be a lot of obstacles that have to be removed for price to make its way even lower. So there's going to be resistance as price falls. Different story than what we're seeing with the dollar. Okay, and we've detailed this in past reports to the members. Taking a look, longs very cooled off, shorts becoming aggressive. There's no reason not to think that price isn't going to continue lower. And so we have the Kiwi, and the Kiwi's increasing in longs, 15, 16, now 19,000. Now we saw an increase also in shorts from 15 to 17, but overall long exposure has jumped up from 52 to 53%. Let's remember, the average long exposure is 38. We're at 53, well above that. It's very bullish. And if we take a look at the net positions here, they were very aggressive with shorts not too long ago, and now we're starting to see a shift into bullish territory. Okay, the same thing here is if we take a look at the sentiment from March. Okay, that's from here to June. Here, the sentiment was bearish. Okay, and now we are entering into neutral territory right here. Okay, so what do you make of that? Very similar to what we're seeing with a couple other pairs, right? How we haven't actually reversed the sentiment, but we're in the process of reversing the sentiment. And then we have to put things into context. Why have some currencies already reversed the sentiment, and why are some still in neutral territory? Well, it all has to do with the charts and the supply and demand that are in control. For instance, when you take a look at here, we have a massive area of supply here. These areas don't get taken out very easily, and they will hold price down. Specifically with supply, they will hold price down. And when you have supply forces in the market holding price down, it causes it to reverse slowly. If it's going from bearish to bullish, it's going to lag in performance compared to those that don't have those obstacles. Okay, so that's what we're seeing with this Kiwi. Is it going to be more bullish in the future? There's a possibility. I mean, there's a lot of evidence to suggest that that's what's going to take place, but we also have to remember where we are in the context of the positions and where we are in context with the charts. All right, so that's it. That's your CFTC report for the data that was collected July 21st, 2020. If you need to find out more information on how we do our analysis and you want to learn more, you can reach us at www.whiteoakfx.com. Thanks, and have yourself a great week. Take care.